Now, we were going to discuss the introduction to accounting. Okay, what is accounting? Accounting is the process of identifying, recording, and communicating economics events of an organization to interested users. Okay, so when we say identifying, this involves selecting economic events that are relevant to a particular business transaction. The economic events of an organization are referred to as transactions. Example of economic events or transaction in a bakery business. Okay, what's in the bakery business? Okay, we have sales of bread and other bakery products, purchase of flour that will be used for baking, purchases of truck needed to deliver the products. Okay, that is identifying. Now we have recording. This involves keeping a chronological diary of events that are measured in pesos. The diary referred to in identification are the journals and ledgers, which will be discussed in the future chapters. Okay, so we were going to further discuss about the recording. Now we have the communicating occur through the presentation and distribution of financial and other accounting reports. Okay, that is accounting. According to accounting theory, accounting is a systematic recording of financial transactions and the presentations of the related information to appropriate person. Based on this definition, we can derive the following basic feature of accounting. Number one, accounting is a service activity. Okay, why? Why it is a service activity? Because accounting provides assistance to decision makers by providing them financial reports that will guide them in coming up with sound decision. Number two, accounting is a process. Okay, so when we say accounting, it is a process refers to the method of performing any specific job step by step according to the objectives or the target. Accounting is identified as a process as it is performed the specific task of collecting, processing, and communicating financial information. In doing so, it follows some definite steps like the collection, recording, classification, summarization, finalization, and reporting of financial data. Number three, accounting is both an art and a discipline. Okay, accounting is the art of recording, classifying, summarizing, and finalizing financial data. The word art refers to the way something is performed. It is behavioral knowledge involving a certain creativity and skills to help us attain some specific objectives. Accounting is a systematic method consisting of definite techniques, and its proper application required skills and expertise. So, by that nature, accounting is an art, and because it follows certain standards and professional ethics, it is also a discipline. Number four, accounting deals with financial information and transaction. Okay, accounting records financial transactions and data, classifies this and finalize their result given for the specified period of time as needed by their users. At every stage from start to finish, accounting deals with financial information and financial information only. Okay, it does not deal with non-monetary or non-financial aspect of such information. Okay, next we have number 6. Okay, number 5, accounting is an information system. Accounting is recognized and characterized as a storehouse of information. As a service function, it, it collects, processes, and communicates financial information of any entity. This discipline of knowledge has evolved to meet the need for financial information as required by various interested groups. Okay, that is the accounting according to accounting theory. About the branches of accounting. So we have 8 branches of accounting. So we have financial accounting, management accounting, government accounting, auditing, tax accounting, cost accounting, accounting education, and accounting research. Okay, so according to Investopedia, accounting is divided into several branches to better serve the needs of different users with varying information's needs. Okay, so these branches sometimes overlap and they are often closely intertwined. Okay, so first we have the financial accounting. Okay, financial accounting is the broadest branch and is focused on the needs of external users. Financial accounting is primarily concerned with the recognition, measurement, and communication of economic activities. Okay, so financial accounting, this information is communicated in a complete set of financial statements. It is assumed under this branch that the user have one common information need. Okay, so financial accounting conforms with accounting standards and developed by settings bodies. So in the Philippines, there is a council created to set these standards. Okay, so we have an example of financial reports. So we have the balance sheet, or also known as statement of financial condition. Next, we have income statement, or the profit and loss statement. Then also the statement of cash flows. So financial accounting is primarily concerned with the processing historical data. Although financial accounting generally meets the needs of external users, internal users of the accounting information also use this information for their decision-making needs. Okay, second, we have management or managerial accounting. Management accounting emphasizes the preparation and analysis of accounting information within the organization. The objectives of a managerial accounting is to provide timely and relevant information for those internal users of accounting information, such as the managers and employees in their decision-making needs. Oftentimes, these are sensitive information and is not distributed to those outside the business. For example, the prices, plans to be open up branches, customer list, or etc. Okay, so managerial accounting involves financial analysis, budgeting, and forecasting, cost analysis, evaluation of business decisions, and similar areas. Okay, third, we have government accounting. Government accounting is the process of recording, analyzing, classifying, summarizing, communicating, and interpreting financial information about the government in aggregate and in detail in reflecting transactions and other economic events involving the receipt, spending, transfer, usability, and disposition of assets and liabilities. Okay, so when we say government accounting, it is this branch of accounting deals with how the funds of the government are recorded and reported. Okay, so it could be you may ask yourself, what are the source of income of the government? Okay, so it may the taxes paid by Filipinos. Okay, where do these taxes go? Okay, it could be the roads, hospital, for education, and other government accounting deals with this transaction. Okay, the recording of inflows and outflows of funds of the government. So that is government accounting. Okay, so fourth, we have auditing. There are two types of auditing. We have external and internal auditing. Okay, when we say external auditing, it is refers to the examination of financial statements by an independent CPA or certified public accountant with the purpose of expressing an opinion as to fairness of presentation and compliance with the generally accepted accounting principle or GAAP. The audit does not cover 100% of the accounting records, but the CPA reviews a selected sample of these records and issues an audit report. Then, internal auditing it is deals with the determining and operational efficiency of the company regarding the protection of company's asset accuracy and reliability of the accounting data, and adherence to certain government management policy. It focuses on evaluating the adequacy of a company's internal control structure by testing segregation of duties, policies, and procedure, degrees of authorization, and other controls implemented by the management. Okay, so that is auditing. Okay, so fifth, we have accounting, tax accounting. Tax accounting helps client follow rules set by tax authorities. It includes tax planning and preparation of tax returns. It is also involved determination of income tax and other taxes, tax advisory services such as ways to minimize taxes legally, evaluation of the consequences of tax decision, and other tax related matters. Okay, so that is the tax accounting. Sixth, we have cost accounting, sometimes considered as a subset of management accounting. Cost accounting, it is refers to the recording, presentations, and analysis of manufacturing costs. Okay, so when we say cost accounting is very useful in manufacturing businesses since they have the most complicated costing process. Cost accountants also analyzed actual and standard costs to help managers determine future courses of action regarding the company's operation. So again, cost accounting will also help the other to set the selling price of this product. Okay, let's say for example, if the cost accounting record shows that the total cost produced can of sardines is 50, then the owner can set the selling price at 60. Okay, so that is cost accounting. Okay, so seventh, we have accounting education. This branch of accounting deals with developing future accountants by creating relevant accounting curriculum. Okay, so accounting education, it is accounting professionals can become faculty members of educational institutions. Okay, accounting educators contribute to the development of the professions through their effective teaching, publication of their research, and influencing students to pursue careers in accounting. So, accounting teachers share their knowledge on accounting so that students are informed of the importance of accounting and its use in our daily lives. Okay, so eighth, we have accounting research. Okay, so accounting research focuses on the search of new knowledge and the effect of economic events on the process of summarizing, analyzing, verifying, and reporting standardized financial information, and on the effects of reported information on economic events. Researchers typically choose a subject area and a methodology on which to focus their efforts. The subject matter of accounting research may include information system, auditing and assurance, corporate governance, financials, managerial, and tax. So, accounting research plays an essential part in creating new knowledge. Academic accounting research addresses to all aspects of the accounting profession using a scientific method. Practicing accountants also conduct accounting research that focuses on solving problems for client or group of clients. The accounting research helps standard settings bodies around the world to develop new standards that will address recent issues and trends in the global business. So that is accounting research. Okay, so that's all for the branches of accounting. The eight branches of accounting. The forms of business organization. So there are four forms of business organization. First, we have the sole or single proprietorship. Second, partnership. Third, corporation. Fourth, the cooperatives. So first, we have the sole proprietorship. It is a form of business is owned by one person. The simplest and the most common form of business organization. Let's say, for example, suppose you want to open your own sari-sari store that will need 10,000 pesos to start, and you used your 10,000 pesos savings to start the said business. So, you are the sole owner of the said sari-sari store. So this type of business is called sole or single proprietorship. Okay, so it is not separate from the owner. The business and the owner is inseparable. Okay, so we have the advantage of sole or single proprietorship. So first advantage is that the owner keeps all the profits. Second, the owner makes all the decisions. Third, it is easy to form and operate. Okay, so the disadvantage of sole or single proprietorship is that the life of the business is limited to the life of the owner. Once the owner dies, the business will cease to operate under the name of the proprietor. Next disadvantage. The amount of capital is limited only by the wealth of the proprietor. Okay, so that is the sole or a single proprietorship. Second, we have a partnership. It is a form of business owned by two or more persons. The details of the arrangement between the partners are outlined in a written document called Article of Partnership. Okay, so let's say for example, for a partnership, what if the needed amount to start your dream sari store is 50,000 pesos and you only have 20,000 pesos savings cash? You ask Juan, your friend, if he is willing to invest his 25,000 pesos and become a part owner of the sari store. Okay, let's assume that he agrees what form of business organization was created. So, therefore, it is partnership because, so, uh, Juan agrees to ask of his friend. So, again, partnership profits are divided among partners based on their agreed sharing. And then the owner is called a partner. So we have the advantage of partnership. First, higher capital because two or more persons will contribute to the common fund. And then it is also easy to operate like a sole or single proprietorship. So the disadvantage of partnership is that the profits are divided among the partners. So, next, a partner can be held liable for the acts of the other partners. In Aluso, the personal properties of the partners can be held beyond contributions and may be used to answer for any liability of the partner. So, that is a partnership. Next, the corporation. So, when we say corporation, it is a business organized as a separate legal entity, artificial person, under the corporation law with the ownership divided into a transferable shares of stock. Let's say, for example, assuming your dream is to open a grocery store and not just a sar store, but you will need 1 million pesos. To start the said business, you have only you only have 25,000 pesos. Your friend Juan has 25,000 pesos, and your mother is willing to invest her 50,000 pesos. But still, there are not enough to start your dream grocery store. Where will you get the money to raise the 1 million? You may consider setting up a corporation. Let's say, for example, your sister, your brother, your friends. So they could be a owner too to become a corporation. And then it is also emphasized that it is a law corporation code of the Philippines that creates a corporation. So number 3, the corporations begin its existence from the date the article and incorporation is approved by the SECR Security and Exchange Commission. Fourth, we have the uh, SEC is the government agency primarily tasked to regulate private corporation in the Philippines. Then we have the owner are called stockholders or shareholders. The word corporation or incorporation, corporation inc. appears in the name of the entity. So the voting rights of the shareholder is generally based on a percentage of ownership. The management of the business is delegated by the shareholders to the board of directors. The ownership is divided into shares, and the value of one share may be denominated at a smaller amount. For example, at 10 pesos per share. The proof of ownership is evidenced by a stock certificate. Okay, so that is a corporation. So we have the advantage of corporation. Corporation is can easily raise additional funds by selling shares of stock to the public. Next, shareholders are not personally liable for the debt of the corporation. The extent of their liability is limited to their equity or ownership in the corporation. So the disadvantage in corporation is that it is relatively complicated to set up, then subject to several legal restrictions as listed in the Corporation Code of the Philippines. Okay, then fourth we have the cooperative. A cooperative is a duly registered association for persons with a common band of interest, voluntarily joining together to achieve their social, economic, and cultural needs. Okay, let's example. Assuming that the mothers in your barangay decided to open a sari-sari store where all the members can buy in cash or in credit. Some mothers were also taught how to sew dresses and bags as part of the project of the group. These bags are then sold to a certain company. Aside from that, the organization provides seminars to the members on various topics involving mothers and their roles. At the end of the year, the profits are distributed among the members based on their capital contribution. The amount of their purchases in the Sari store during the year is also computed, and they receive something out of the profit or surplus based on their purchases. This form of business organization is called a cooperative. And then, the owners are called members who contribute equitably to the capital of the cooperative. Next, the members are expected to patronize their products and services. Next, the word cooperative appears in the name of the entity. Next, this form of business organization is regulated by the Cooperative Development Authority. Then, the advantage of cooperative enjoys a certain tax exemption privilege. Then, promote the concept of sharing resources. While the disadvantage of the cooperative is that limited distribution of surplus requires continuous education program for members. Then the member have active and direct participation in the business of the cooperative. Types of business according to activities. Okay, so there are three types of business according to activities. Okay, number one, service business. Number two, merchandising business. Number three, manufacturing business. When we say service business, these types of business offers professional skills, advices, and consultation. Let's say, for example, barber shops, beauty parlors, repair shops, banks, accounting, and law firms. So that is service business. Next, we have merchandising business. These types of business buys at wholesale and later sell the products at retail. They make a profit by selling the merchandise or products at prices that are higher than their purchased cost. This types of business is also known as buy and sale. So we have an example here. Bookstore, sari-sari store, and hardware store. So that is merchandising business. Next, we have manufacturing business. These types of business buys raw materials and uses them in making a new product, therefore combining raw materials, labor, and expenses into a product for sale later on. Okay, let's say for example, shoe marketing business, car manufacturing, or it could be furniture manufacturing business. So that is manufacturing business. Okay, so we have additional information.
Okay, there are business that may be classified under more than one types of business. Okay, let's say for example, a bakery. For example, combines raw materials in making loaves of bread. So, it is under to manufacturing. Then, sale a hot pan de sal. Okay, so belong to merchandising and caters customers' order in small coffee table serving of ensaymada and hot coffee. So that's belong to service. So that is example of a combination of types of business. So it may there's a merchandising, there is a manufacturing in one business. So that's all for the types of business according to activities.
Types of major accounts. Okay, when we say major accounts, we have five major accounts. So, namely, first we have assets, liabilities, capital, income, and expenses. Okay, so when we say asset, it is the resources owned and controlled by the firm. Next, we have liabilities. When we say liabilities, it is the obligation of the firm arising from past events which are to be settled in the future. So that is liabilities. Next, we have the equity or the owner's equity. It is the owner's claim in the business. So it is the residual interest in the asset of the enterprise after deducting all its liabilities. So that is equity. Next, we have the income. It is the increase in economic benefits during the accounting period in the form of inflows of cash or other assets or decrease of liabilities that result in increase in equity. Income includes revenue and gain. Next, we have expenses. So when we say expenses, it is the decreases in economic benefits during the accounting period in the form of outflows of assets or incidences of liabilities that result in decrease in equity. So that is expenses. In asset, we were going to discuss the difference between the current versus non-current asset and tangible versus intangible asset. Okay, so when we say current asset, are asset that can be realized, collected, sold, used up to 1 year after year-end date. Example include cash, accounts receivable, merchandise inventory, prepaid expense, etc. For non-current asset, we have our asset that cannot be realized, collected, sold, used up to 1 year after year end. Example includes property, plant and equipments, furniture, building, land, long-term investment, or etc. Now, we were going to proceed to tangible asset versus the intangible asset. Okay, when we say tangible assets, are physical assets such as cash, supplies, and furniture and fixtures. When we say intangible asset, are non-physical assets such as patent and trademarks. Okay, so that is the difference between the uh, current asset, non-current asset, tangible and intangible asset. Okay, so these are the accounts belong to current assets. So we have cash, account receivable, notes receivable, inventories, supplies, prepaid expenses, accrued income, and short-term investments. So that accounts belong to current asset. Okay, so when we say cash, is a money on hand or in bank. And other item considered as medium or exchange in the business transaction. Okay, so the account receivable are amounts due from customer arising from credit sales or credit services. Then we have the notes receivable are amounts due from clients supported by promissory notes. Next, we have the inventories are assets held for resale. Then the supplies are items purchased by an enterprise which are unused as of the reporting date. Then next, we have the prepaid expense. Our expenses paid in advance. They are asset at the time of payment and become expenses through the passage of time. Next, we have the accrued income in revenue earned but not yet collected. Then the last one, the short-term investment or the investment made by the company that are intended to be sold immediately. So that accounts belong to current assets. Okay, next accounts which belongs to non-current asset. So first we have property, plant and equipments. Then long-term investment, then intangible assets. So that's account belong to non-current asset. Okay, when we say property, plant, and equipments are long-lived assets which have been acquired for use in the operations. Okay, then the long-term investment are the investment made by the company for long-term purposes. Next, we have the tangible asset or assets without a physical substance. Let's say, for example, includes franchise and copyright. So that is accounts belong to non-current asset. Next, we have the liabilities or the debts and obligation of the company to another entity. So, we were going to discuss the difference between the current and non-current liabilities. When we say current liabilities, liabilities that fall due. Let's say, for example, the paid recognized as revenue within 1 year after year end. Another example includes account payable, utilities payable, and unearned income. Okay, so that is current liabilities. Non-current liabilities are liabilities that do not fall due, paid recognized as revenue within year after year end date. Let's say, for example, it includes notes payable, loans payable, mortgage payable, etc. So that is the non-current assets. Okay, so we were going to define each account and differentiate one from others. Okay, in current liabilities includes account payable, notes payable, accrued expenses, and earned income. So these accounts belong to current liabilities. When we say account payable, are amount due or payable to suppliers for good purchase on account or for service received on account. Okay, so that is account payable. Next, notes payable are amounts due to third parties supported by promissory notes. So that is notes payable. Accrued expenses are expenses that are incurred but not yet paid. Example, salaries, payable, taxes, and payable. Next, Unearned income is cash collected in advance. The liability is the service to be performed or goods to be delivered in the future. So that's account belong to current liabilities. Next, we have the non-current liabilities. So when we say non-current liabilities, it includes loans payable, mortgage payable. Next, we were going to proceed to owner's equity. So when we say owner's equity, it is the residual interest of the owner from the business. It can be derived deducting liabilities from asset. Okay, so when we say owner's equity, it belongs the capital account, drawing account. So when we say capital, it is the value of cash and other assets invested in the business by the owner of the business. Okay, so drawing, it is the account debited from asset withdrawn by the owner for personal use from the business. So that accounts belong to owner's equity. So next, we have the income. When we say income, it is the increase in resources resulting from the performance of service, selling of goods. Okay, so let's say for example, service revenue for service entity, sales for merchandising and manufacturing companies. Okay, so next account, we have expenses. When we say expenses, it is the decrease in resources resulting from the operation of business. Okay, so expenses decreases equity in the accounting equation. Let's say, for example, salaries expense, interest expense, and utility expense, books of accounts. But before we proceed, we were going to define accounting. Accounting is the process of identifying, recording, and communicating economic events of an organization to interested users. Okay, so when we say identifying, it is to select economic events or transactions. Then recording is to record, to classify, and to summarize. Communication. It is to prepare accounting reports, then to analyze and interpret for users. There are two major types of books of account. First, journal, and the second is ledger. Okay, so the first types of books of accounts is journal. So when we say journal, it is the company's initially record transaction and events in chronological order, the order in which they occur. Thus, the journal is referred to as a book of the original entry. For each transaction, the journal shows the debit and credit effects on the specific account. So in journal, there are two types of journal. It is the general journal and the special journal. Okay, in general journal, it is the most basic journal. Typically, a general journal has space for that date, account title, and explanation, reference, and two amount column. Okay, so the journal makes several significant contribution to the recording process. Okay, number one, it discloses in one place the complete effect of a transaction. Number two, it provides a chronological record of transaction. Number three, it helps to prevent or locate errors because the debit and credit amount for each entry can be easily compared. Okay, so this is the example of general journal. Okay, in journalizing process, entering transaction data in the journal is known as journalizing. Companies make separate journal entries for each transaction. A complete entry consists of number one, Date of the transaction, which is entered in the date column. Number 2, the debit account title, that is the account to be debited, which is entered first at the extreme left margin of the column headed account title and explanation, and the amount of the debit is recorded in the debit column. Number 3, the credit account title, that is the account to be credited, which is intended and entered in the next line in the column headed the account title is explanation, and the amount of the credit is recorded in the credit column. Fourth is a brief explanation of the transaction, which appears on the line below the credit account title. A space is left between journal entries. The blank space separates individual journal entries and makes the entire journal easier to read. Number 5, the column titled Reference, which stands for reference. A ref stands for reference, which is left blank, then the journal entry is made. This column is used later when the journal entries are transferred to the ledger account. To illustrate the recording of transaction in the general journal, let us use the following transaction as an example. So we were going to record the above or the mentioned transaction in the general ledger. Okay, so we have here an example. September 1, 2015, Mr. Ben Mabait invested 500,000 in a restaurant business by opening an account with Superbank. Okay, so cash 500,000 in debit, credit the Mr. Ben Mabait capital. Okay, then the summary or the explanation to record investment of Mr. Ben Mabait. Okay, so in September 5, 2015, purchases of kitchen appliances for his business amounting to 100,000 by issuing a check. Okay, so kitchen appliances, that is recorded to debit, and cash to credit. So explanation to record purchase of kitchen appliances. Then in September 6, 2015, started his operation. He made a sale for that day amounting 20,000 pesos. Okay. So cash, that is debited 20,000, then credit sales. Then the explanation to record sales of the day. Okay. Some entries involve only two accounts, one debit and one credit. An entry like this is considered a simple entry. Some transaction, however, requires more than two accounts in journalizing. An entry that is required three or more accounts is a compound entry. So if there is account, three or more account, that is compound entry. All of the transactions in the above examples are simple and trees. So we have an example of compound entry. Okay. So on September 7, 2015, Mr. Mabait purchased a motorcycle costing 80,000 pesos. He pays 30,000 pesos cash and agrees to pay the remaining 50,000 pesos in account to be paid later. So that is example of compound entry. So we have here, so an example of general journal with compound entry. So there are three. Transportation equipment, 80,000 for debit. Cash and account payable would be credited. So the explanation to record purchase of motorcycle by paying cash and balance on account. So that is example of compound entries. For special journal, some businesses encounter voluminous quantities of similar and recurring transaction, which may create congestions if these transactions are recorded repeatedly in a single day or a month in the general journal. In the case of our examples, if Mr. Mabait will be recorded the sales per day using the official receipt or cash sales invoice issued, it would be unnecessary and impractical to credit sales account repeatedly. In order to facilitate efficient and practical recording of similar and recurring transaction, a special journal is used. Okay, so the followings are the commonly used special journals. Okay, cash receipt journal used to record all cash that has been received. Cash disbursement journal used to record all transactions involving cash payment. Sales journal or sales and account journal used to record all sales and credit on account. And also purchase and account journal used to record all purchases of inventory on credit or on account. Okay, so in cash receipt journal, is used to record transaction involving receipt or collection of cash. Okay, so to illustrate, this is the format of cash receipt journal. Okay, so number one, the date of the transaction is entered in the date column. Number two, a brief explanation of the transaction is entered in the description column. Number three, the column titled Brief, which stands for reference, which is left blank when the journal entry is made. This column is used later when the journal entries are transferred to the ledger account. Okay, so next, the debit cash column represents the amount of cash received for the particular transaction. Next, the major category of receipts, such as cash sale and collection of account receivable, are provided when separate column. These transactions are frequent and repetitive items. Therefore, a separate column is provided. Next, the column Sanjay is used to various miscellaneous and less regular items such as capital investment, receipt of loan, proceeds, and among others. Okay, then next we have the cash disbursement journal. Okay, so when we say cash disbursement journal is the opposite of the cash receipt journal. It is the journal where all cash payments are recorded. So an example of cash disbursement journal. Okay, so this is the example. So first, it should indicate the date of the transaction is entered in the date of column. Then next, a brief explanation of the transaction is entered in the description column. The column titled Ref, which stands for reference, which is left blank when the journal entry is made. This journal is used later when the journal entries are transferred to the ledger account. Then next, the check or voucher number represent the identifying number of the check issued for the related cash payment. Most of the time, a check or cash voucher accompanies the disbursement. The voucher number may be used as the alternative for this column. Okay, next, the debit cash column represents the amount of cash received for the particular transaction. Next, the major categories of receipt, such as cash sales and collection of account receivable, are provided with separate column. These transactions are frequent and repetitive item. Therefore, a separate column is provided. Next, the column sundry is used to various miscellaneous and less regular items such as capital investment, receipt of loan proceeds, among others. Okay, so the source document used to update this journal are the check voucher or cash voucher, cash receipt or official receipt from suppliers or vendors. Okay, so that is the cash disbursement journal. Okay, next we have purchase journal. Okay, so when we say purchase journal, the purchase journal or the purchases and account journal is used to record and recurring transaction of purchases on account. The source of documents of purchases journal are the invoices from the supplier of the company. Okay, so this is the example of purchase journal. Okay, first, the date of the transaction is entered in the date column. Next, a brief explanation of the transaction is entered in the description column or the name of the supplier. Next, the column titled "Draft," which stands for reference, which is left blank when the journal entry is made. This column is used later when the journal entries are transferred to the ledger account. Then next, the change invoices number or sales invoice number represent the identifying number of the source document issued by the supplier. When the items, good or merchandise, were delivered to the company when the purchase was made. Excuse Again, when the purchase is being made. Next, the debit account payable column represents the amount of the goods or item purchased on credit from the supplier. The amount is indicated in the charge invoice issued by the supplier. Okay, again, the source document of this journal is the charge invoice from the supplier or a vendor. Next, we have sales journal. Sales journal or sales and account journal is used to recording several sales transaction and account. The source document for this journal is the charge invoice or sales invoice for credit transaction to various customers or client. This is example of sales journal. Okay, number 1, the date of transaction is entered in the date column. Number 2, a brief explanation of the transaction is entered in the description column or the name of the customer. Third, the column titled "Ref," which stands for reference, which is left blank when the journal entry is made. This column is used later when the journal entries are transferred to the ledger account. Fourth, the charge invoice number or sales invoice number represent the identifying number of the source document issued to the customer when the sale was made. Number 5, the debit account receivable column represent the amount of the sale transaction indicated in the charge invoice. Then sixth, the credit sales column represent the amount of the sale transactions indicated in the charge invoice. Okay, so the source document of this journal is the charge invoices issued by the business. Okay, so next we have ledger. Okay, the ledger refer to the accounting book in which the accounts are there related among the recorded in the journal are posted periodically. The ledger is also known the book of final entry because all of the balance in the ledger are used in the preparation of financial statement. This is also referred to all as the T account because the basic form of the ledger is like the letter T. Okay, so there are two kinds of ledger. So it is general ledger and the subsidiary ledger. Okay, so when we say general ledger, it is the ledger which commonly referred by accounting professional as GL. So when we say GL, it is automatically it is general ledger. Is a grouping of all account used in the preparation of financial statement. The GL or general ledger is a controlling account because it summarizes all the activities that have taken place as recorded in its subsidiary ledger. So this is the example of general ledger. So the account portion, okay, so the account here refer to the account title, for example, cash or account receivable. The account number is an assigned number for each account title to facilitate is in recording the cross referencing. The date column identifies when the transaction happened. The item represents the source journal and the nature of the transaction. The reference identifies the page number of the journal or our special journal from which the information was taken. The debit and credit column are used in recording the amount of transaction from the general journal or special journal. The balance column represents the running balance of the account after considering the debit and credit amount. If the running balance amount is positive, the account has a debit balance, whereas if has a negative running balance, the account has a credit balance. Then next, the subsidiary ledger. Okay, it is a group of a like account that contains the independent data of a specific general ledger. A subsidiary ledger is created or maintained if individualized data is needed for a specific general ledger account. An example of subsidiary ledger is the individual record of various payable to supplier. The total amount of this subsidiary ledger should equal the balance in the account payable general ledger. So this is example of subsidiary ledger. Okay, the upper portion indicates the name and address of the vendors or supplier. The vendor number is an assigned number for each vendor as reference in keeping the records of a supplier. The date column identifies when the transaction happened. The description column describes the nature of transaction. The reference identifies the page number of the general or our special journal from which is information was taken. The debit and credit column reflect the various effect every transaction to the record of the supplier or the vendor. The balance column provides the running balance of every supplier. Take note that the total running balance for all subsidiary ledger should equal the account payable ledger. Okay, so again, as we defined accounting, accounting is the process of identifying, recording, and communicating economic events of an organization to interested users. Thank you.